The video you're about to watch may cause excessive excitement, awesome discovery, and a strong urge to become a trading mastermind. So if you're ready to level up your trading game and join the ranks of the financially fearless, then buckle up guys and let's dive in. So in today's video, we'll be talking about what we refer to as price action. So price action is the secret sauce that separates the pros from the, well, not so pros. In essence, price action is the art of reading the market, understanding the psychology of traders, and making informed decisions that will make your bank account to smile. As Warren Buffett wisely or beautifully put it, price action, or should I say price, is what you pay, and value is what you get. And with the price action that I'm about to teach you, we'll be getting the value of a lifetime. So I'm going to need you to sit back, learn, and maybe, just maybe, you can become a trading mastermind. Now, first thing first, what is price action? In crypto terms, price action refers to the movement of crypto assets, alright? Or should I say, price action refers to the movement of cryptocurrency price over time using historical price data, charts, and pattern. Let me make it really simple for you guys. Now, imagine a crypto asset as an ocean. The waves formed by that ocean is price action. So this is the waves, right? This is the wave formed by the crypto asset, right? So this is the price action. So the movement of the wave, including the height of the wave, right? So this is the height of the wave. So including the height of the wave, and then the shape that the wave is taking is the price action, right? So the bottom, right? The bottom where the wave started, which is right here, okay, right here. The bottom where the wave started is your support, okay? And the height of the wave, or the height at which the wave reached, which is right here, is your resistance, right? I hope you're understanding what I'm explaining. The next thing we'll talk about is reversal. So if the wave rises, the first thing we notice is the gradual increment, right? The gradual increment of the wave to the upside, just like your price action, okay? Now, after the gradual increment, the wave keeps getting weaker as it keeps getting higher. The buyers keep losing interest and the sellers keep coming in, right? So with time, the wave gets weaker and then the sellers take over the market, making the wave to actually flap, okay? So by understanding the illustration of the ocean-like movement of price action, traders can have insight on how to navigate the market, right? So trend helps us to verify where the market is heading. Now, how do we identify an uptrend or a downtrend? So we can identify an uptrend or a downtrend just by looking at the charts, or we can identify an uptrend when the market is making higher highs and higher lows in a bullish trend. All right, so in a bullish trend, the market keeps making higher highs and higher lows. So what I mean is that the new highs and lows of the asset price will become higher than the previous highs and lows. All right, so let me give you an example, or let me illustrate something for you. So like I told you, this is an uptrend. Okay, this is an uptrend. So how can we tell if this is an uptrend? This was the low, the first low, okay, and then it made a new high, all right, and then it made a higher low, which means the low or the new low is higher than the previous low, okay, and then what? It made another higher high right here, okay, and then it made another higher low again, meaning that this high, the new high, is higher than the previous high, and then the new low is also higher than the previous low. So if it continues to make this higher highs and higher lows, right, higher highs and higher lows, then it is showing you, or it is telling you that this is an uptrend, okay. Likewise, on a downtrend, okay, the lows become lower low and lower high. All right, lower low and lower high. So the new lows is going to be lower than the previous low, okay, and then the new highs are going to be lower than the previous highs. As you can see in this illustration, or in this chart, there's a high over here, and then there's a lower high, a lower low. All right, another lower high, lower low. So it will keep making those lower highs and lower lows until it gets to a point where the market will tend to reverse. All right, so I hope you can now be able to identify an uptrend and a downtrend. Let's talk about another way or an additional way that you can be able to identify trends by not by even looking at the higher highs and higher lows. So you can be able to identify an uptrend or a downtrend by what we call break of structure. All right, break of structure. And break of structure is formed when price rises above a recent trend after a short retest in the bullish market, or when price falls below a trend after a short or a recent retest in the bearish market. Let me repeat that again. Break of structure is formed when price rises above a recent trend, okay, after a short retest in the bullish market, or when price falls below a short trend, okay, after a short bullish retest in the bearish market. Let me tell you what I'm talking about, or let me go to a place where I've made a small illustration on this. By the way, I'm actually on a live trade right now, but we'll talk about that in later times. So like I earlier explained, a break of structure is formed when price rises above a recent trend after a short retest. As you can see, this is an uptrend, right? And it started over here, all right? This is the low, this is the new high, and then this is a higher low, and then a higher high formed over here. So this place, all right, this recent high, the wick of the recent high touching the body of the new candle, or the new body or the new structure, is what we call break of structure. It means that the new structure has broke above this old structure. All right, so it means that the new structure has broke above the recent or the previous structure. Then it made another higher low right here. Okay, sorry, it made another higher low right here, and then made a higher high, forming another break of structure right here. Okay, it means that this new structure, okay, has broken the former structure. This is break of structure. So this is another way that you can be able to identify if the market is actually on an uptrend or a downtrend. So same applies to the bearish market. So now that we've known all this, the next question is, where can we buy, or when can we buy an asset so that it can go up and make some money or make some profit? And when can we sell the asset, which is the entry level, right, and the exit level? Where can we sell the asset so that it can come down and equally make us some profit? When we are trading futures, of course, because we only make money when the market is going down on futures, and we make money only when the market is going up on spots. So we can buy or sell an asset if the trend forms something referred to as change of character. Some people call it market structure shift, and some people call it change of character. So change of character refers to when the market trend changes in behavior. Change of character refers to when the market trend changes in behavior. So what I typically mean is that we are on a bullish sentiment right now, right? We're on a bullish sentiment because the market is making higher highs and higher lows, higher highs and higher lows. So change of character only occurs when these higher highs and higher lows get disrespected, either by a lower high or a lower low. So if the market fails to make a higher high or fails to make a lower high and then makes a higher low, a lower high or a lower low, then a change of structure has occurred, meaning that it is signaling us to actually go down. Okay, so what happened right here is that, let me zoom it out a bit so you can see. All right, so the market made a higher high from here, okay, making a break of structure. So from this place, from this point, it made a higher high, reaching to this place, grabbing liquidity, and then it came down, okay, to this point right here. It came down to this point right here, and then it failed. All right, it failed to make another higher high. It failed to make another higher high, making a higher low, and then tending to go down. Okay, tending to go down. Now this is where your change, okay, your change of character occurred. Okay, so if I'm going to zoom out a bit, if I'm going to zoom it out a bit, you're going to see that the market got disrespected, forming an equal position right here, which serves, or which is going to serve as our new retest. Okay, let me show you the new supports. Okay, it formed an equal level from this place. Okay, so if you notice something, you're going to see that whenever the price came down to this point, it's just going to hit and then tend to go up, meaning that buyers don't want it to actually exceed this level, and it's going to go down again and hit. But what, there's a liquidity over here. All right, so the market has grabbed liquidity and it wants to go down. That was why my entry level was at this point right here, as you can see. I'm currently on a live trade, waiting for the markets, or waiting for price to just go down and break below the support area. All right, not with the wick, but with the entire body. When it breaks below the support area, only then can I be able to actually look for the next possible support line where I can take my where I can take my profit. All right, so that is just how this change of character works. All right, so change of character goes hand in hand with break of structure. All right, and change of character and break of structure are all subtopics of price action. So trading price action requires you to know break of structure. All right, it also requires you to know what change of character is, like I've explained right now. Okay, so you can be able to actually trade this market on any time frame. That's one thing I love about price action strategy, trading strategy. You can trade it on a 5 minutes, you can trade it on a 1 hour, 30 minutes. It doesn't matter. Like, it acts independently, unlike other technical analysis indicators that actually need you to go to the 1 hour for context, needs you to go to the 1 day to see the price direction, and then come back to the 5 minutes or 15 minutes for entry. All right, so now that we've known how we can be able to navigate the uptrend and downtrend, where can we enter? This is one of the major problems that most of my students on the VIPs are actually facing. Where can we enter? So the moment we spot a change of character, the next thing we should look for, let me clear all this, the next thing we should look for is what we call candlestick pattern. Candlestick pattern. So a candlestick pattern is a pattern formed by candlesticks, all right, that tends to tell you where the market is actually heading to. All right, so for instance, now that I've seen a change of character over here, okay, a change of character that occurred over here, the next thing I'm going to look for is a bearish engulfing candlestick. So a bearish engulfing candlestick is when the red candle, which is the selling candle, the sellers, let me illustrate it for you. So it's when the red candle over here totally engulfs the green candle that has formed recently. All right, let me make it clear. When this red candle totally engulfs the green candle that has formed before it, so it is telling me that the market is tending to go down, which it actually did. Okay, took a retest, goes down again, and we are just waiting for the market to keep going down until it breaks that support level I earlier showed you. All right, so if you want more hints or more comprehension on this topic, you should consider joining the VIP mastery class, right? And you can do that by actually hitting the notification bell first, yeah, and then hitting the like button on this video, and then go to the description box below, look for my WhatsApp link over there, and you can talk to me. Then we can enroll you on the VIP mastery class, where I'm going to talk about different ways that you can be able to identify both bullish and bearish candlestick pattern, and then chart patterns that can be formed, which is the double top or double bottom, triple top, triple bottom, or the head and shoulder or inverse head and shoulder, that actually engulfs the bearish or bullish engulfing pattern, or the hammer pattern, or doji, whichever pattern that forms. So I hope this video is going to help. But please, guys, don't make trading look so complicated, or don't feel as if trading is complicated. Trading is not a complicated issue if you decide not to make it complicated. All right, all it needs is patience, perseverance, and consistency. You've got to focus, and regardless the fact that I keep making videos on strategies, techniques, simple ways, strategies without experience, don't say you want to learn everything. Like, I am teaching. All right, I am a teacher, so I teach crypto, so it is essential for me to know almost everything. All right, almost everything. But you, as somebody that is acquiring the knowledge, just stick to one or two strategies that you know or feel is is working in alignment with how you understand, then perfect yourself on that strategy. And you can use just one strategy to make your portfolio grow and make your money increase, like invest in crypto. And you can just use that one strategy to actually make a fortune out of crypto. Right, so please, guys, I am urging you to not stress yourself by trying to learn everything. Just watch the videos, get something that works for you, and then use it. Sharpen your trading skill on that topic or on that strategy, and use it day in, day out. See what you become in the next 3-6 months or even a year. All right, so in my next video, we are going to be talking about more advanced ways on price action, and then how you can be able to master candlesticks and chart patterns. I hope this video helps, and I hope you have a nice day. Ciao.
It's all by your side.